Yo, what's really good, people? It's Curtis back with another portfolio update. We've got lots of stuff to cover off, so I'm not going to keep you waiting. But if you are new to the channel, please subscribe to the channel. Please like the video, please comment on the video with any questions, suggestions, etc. Infinite Investors is about helping all new and non-investors make sense of the market. I do this in a number of ways, from videos around my portfolio to videos around specific stocks, etc. And today's video, which is another portfolio update. So I'm going to get straight into it. It's been a good performance overall this week. I'm up about 2% rolling month on month. Now, just for those of you guys that are new to the way I invest and the way I sort of report data, in these portfolio videos, because I take a dollar cost averaging approach, a modified dollar cost averaging approach, which basically means on every month I invest a certain amount into all of my stocks. I like to report the rolling month on month performance, because therefore if a stock has performed poorly, I might overfund it. If a stock has performed exceptionally well, I might add less funds just to try and buy and take advantage of the dip. So that's how I report it when I talk about my sort of rolling month on month performance. In terms of my overall performance, so just to date, currently I'm about 5.1% for the year, which is interesting. It's okay. I mean, the average at the moment for the year is 6.25%. So that's the average performance of the market at the moment for the year. So I'm just below average. I was miles below average before, so I am creeping up, and hopefully I can beat the average at the moment. That information, that data is from Simply Wall Street, but I'm going to do another video on that specifically, so look out for that to come in the channel, and you can kind of see what I mean there. So what's gone on in the last couple of weeks? Well, first of all, primarily I received a £70 dividend from Taylor Wimpey. You can see it sitting there, smiling back at me. I need to reinvest that, but I did get that dividend on Friday, so I wasn't able to reinvest that. Quite about 2 months ago, I made a video on Taylor Wimpey's special dividend. I think it was about 6.84%. Check the channel out, you'll see the video. So I did announce it, and I did say that I'm going to fund a little bit more to try and take advantage of that. I am happy that I did so, because now that £70 special dividend is my largest dividend payment to date, which is really nice and positive to see. And actually, a fun fact for you is that dividends actually make up about half of my profits to date. So when I talk about the 5.11% or 5.1% return, half of that is from dividends and half of that is from capital gain appreciation. So I never really intended to make that much from dividends. I expected dividends to be sort of a secondary income stream, but hopefully to make more in the capital gains return, and it's kind of worked out a little bit not as I expected, which is interesting, and it's interesting insight that I'm going to take into my investment strategy for next year, which I am going to change, and I'm going to speak to you a little bit about that later on. But in terms of the next dividend payments that I'm going to expect to receive, they're now all going to be in August, and there's 3 of them. One being MSCI China, so I've just obviously started investing in this Chinese stock market ETF tracker. The next one are both the telecom brands. So Verizon will be paying me their quarterly dividend in August, and then Vodafone will be also paying me their dividend in August. Now, Vodafone's dividend will be around the £20 mark. That'll make up about a 3% return, which is good, and then the other 2 combined is about £5, so nothing too special, but obviously every little helps. Although I don't invest in Tesco, but every little helps, generally speaking, when it comes to these dividends, and they always get reinvested back into the portfolio. The good thing about the Vodafone one, I think it will kind of make up for a slightly modest capital gain performance over the last few months. But I'm often asked, when do I expect the Vodafone share price to actually start increasing based off 5G? In the very first video that I invested in Vodafone, I did say my horizon is about a year, so I'm still patient and expecting to see a decent level of return by the end of the year. However, this is providing that earnings reports are decent. If earnings reports are catastrophic, then it really doesn't matter if they launch 5G, 6G, 10G, 100G. It doesn't really matter what they launch. If earnings reports aren't good, no one's going to invest, people are going to sell. And so obviously that will counteract any performance in sort of new product lines, etc., etc. But I'm still hopeful. But speaking of earnings reports, earnings season is among us. It's about that time. It's that time right now that we should start reviewing our stocks and seeing when their earnings update is going to be announced. Because as we know, as we've seen in the last quarter, earnings updates can significantly spike your portfolio, and it can also significantly drop your portfolio. Both can be opportunities depending on where you're at with your portfolio. So there isn't a sort of one size fits all, but if you see where a stock might spike because of a good earnings update, then obviously you might have a different strategy that you might take on after that point. So it's worth knowing when your stocks earnings updates are going to be announced, because I think with a lot of mine there's going to be quite a significant movement. So as an example, Barclays, their earnings update is going to be announced on the 1st of August, so in about 3 weeks time. We've got Lloyd's, their earnings update is expected on the 31st of July, so just the day before. And we've got CYBG, their earnings update is on the 30th of July. However, CYBG is a little bit of a weird one. It's a bit of a weird one just because their cadence is sort of it's before the rest of the market. It's a little bit weird. So basically this is going to be CYBG's Q3 update, whereas all of the other stocks that I've seen at the moment is their half yearly update, just because they kind of work towards a different pattern. So check out your stocks and be prepared with what actions you might take. I specifically called out the banking stocks, and the reason why I specifically called out the banking stocks is that I'm eager to see theirs. Banking makes up 21.2% of my overall portfolio, but it only contributes to about 6% of my total return. So I made a video recently, Simply Wall Street Journal, volume 2, and in that video I talked about your contributing factors in terms of the amount your portfolio is allocated to specific stocks, and then the amount those specific stocks contribute in terms of returns. And so to put that into perspective, if I have £100 in all of my stocks, as a total fund, so £100 distributed across all of my stocks, £20 of that 100 is in banking, and if I have £100 profit from that, only £6 of that profit comes from banking. So I'm kind of oversubscribed, and so I am probably going to start selling some of my banking stocks. It's not a question of if, it is a question of when. It's a question of when and how, and I think those earnings updates will influence it, because currently CYBG is my biggest banking performer. It's at about 5.88%, as you can see there, whereas Barclays and Lloyd's are tailing behind. However, CYBG only pays one annual dividend, whereas Barclays and Lloyd's pay a bit more of a regular dividend payment. I think 3 times a year for Barclays, I think including special, I think Lloyd's twice or 3 times a year, etc. So we shall see what basically happens in that space. Also, what's gone on this month is that there's still ongoing Fed talks of lowering interest rates, which we know is going to have a negative impact on banking stocks. So whereas the performance isn't that great, I might sort of reallocate some of my portfolio into other stocks. Actually, Fed lowering interest rates probably has a negative impact on finance stocks overall, because Aviva and Legal in general have fallen for me in the last couple of weeks, accumulatively about 3.5%. And so although they're still profitable, they're still in the green. I think that's definitely had an impact in finance stocks overall, but definitely it will hit banking stocks, as we've kind of discussed in previous videos. However, if the Feds do lower their rate, if that actually happens, then we're going to see a positive impact in the general stock market. And an example of that has been Facebook, which has gone from strength to strength. Facebook is now nearing their all-time high, record high. So they're encroaching on uncharted territory at the moment. So I'm happy I got into Facebook when I did. It's jumped 6% since the last time I invested. And yeah, it seems to be growing. Obviously, there's other contributing factors, but I think the Fed lowering rates will have a significant economic factor to all of our stocks. One thing to note is that there was a recent release of Chinese trade data, which I do think has a negative impact in Chinese performance, and why I'm sort of down just shy of 3% on my current fund. But as you can see, I haven't put that much into it, so it's not the biggest concern. But obviously, it's interesting to note. And one thing that I read, I think in Market Watch, is that because of the Chinese trade data, because that was not as expected, people are hedging against gold. And as you can see, sentiment still seems to be doing really, really well. It's actually my second best performing stock, as you can see the return there on your screen at the moment. However, it's still equity, so obviously that's due to the balance sheet. Sentiment has no debt, and it's got a few other contributing factors to make that good. But I do think that when gold is up, there is a sort of halo effect that impacts sentiment as well. But my best performing stock at the moment, currently at this moment, is Barrett, which is doing really, really well at 17.21%. So yeah, that's kind of that. Sentiment and a few others is definitely holding my portfolio up. So yeah, that's sort of the portfolio update. Oh yeah, I've got a free share. So a free share has now been queued. I managed to convince my missus to sign up to free trade, so I am expecting a free share. I think they said it's going to be in a couple of weeks. I would kind of like if it was sooner than a couple of weeks. It should at least be within a week. But hey, it's a free share, who am I to complain? So we will see when that free share arrives and what that's going to be and what I'm going to probably do with that. And yeah, it'll be interesting to see what that is. But yeah, that's the portfolio update as things stand. July is going to be a very, very, very interesting month. We've got Fed data to still come out. We've got Chinese trade data and Chinese stock market performance will have an impact. We've got earnings season, which is obviously going to impact everybody's stocks. So we're going to see what's going to happen there. We've got the whole UK politics and Prime Minister situation with, I think, is it July 23rd? I think July 23rd is the date when a new Prime Minister will be announced. So we'll see what impact, if any, that's going to have on the stock market. It's particularly obviously the UK market. And so yeah, we've got I think a very, very interesting month ahead. So I expect to see a lot more volatility, a lot more movement in the stock performance. And we'll have to sort of take action accordingly from there. Hope you found this video useful. If you did, please like, please comment, please subscribe to the channel. Please share the video with anyone you might feel will find this video interesting. And obviously I'll keep on producing these videos providing you guys like it. Other than that, have a great weekend. Stay safe, and last but not least, happy investing. Peace.